The latest Consumer Price Index (CPI) data showed a notable cooling in inflation. Year-over-year inflation came in at 2.4%, lower than the 2.6% expected. Core CPI also declined, registering 2.8%, down from 3.1% in February. In addition, Supercore CPI, which excludes shelter costs, marked its lowest year-over-year level since 2021. In response, financial markets began pricing in the possibility of a full percentage point in Federal Reserve interest rate cuts by the end of the year. This signals a potentially dramatic shift in monetary policy and could indicate underlying concerns about economic stability. Bitcoin initially surged by nearly 8% on the news, in line with a broader risk asset rally. The S&P 500 also recorded a 9.5% gain, its 8th best single-day performance in history. However, such strong rallies have historically coincided with or preceded major financial crises, for example, 1933, 2008, and 2020, often categorized as relief rallies during periods of macro stress. On the geopolitical front, former President Donald Trump announced a 90-day pause on global tariffs for over 75 countries excluding China, which remains subject to 125% tariffs. This move is widely interpreted not as a retreat, but as a tactical negotiation to relieve pressure on U.S. markets while maintaining leverage over Beijing. In retaliation, China imposed 84% tariffs on U.S. imports, and the Chinese yuan fell to its lowest level since 2007. This combination of trade friction and currency devaluation underscores rising economic tensions. Amid these developments, institutional players and sovereign actors are taking note of Bitcoin's potential role in the global financial system. According to a recent report by VanEck, Bitcoin is increasingly viewed as a viable monetary asset, especially in the context of de-dollarization. Even countries like Pakistan are exploring Bitcoin mining as a means of utilizing excess energy capacity. Furthermore, reports have surfaced suggesting China and Russia are settling some trade transactions in Bitcoin, a sign of shifting dynamics away from US dollar dominance. In a major signal of growing institutional recognition, S&P Global Ratings recently referred to Bitcoin as a geopolitically neutral form of money. Managing Director Andrew O'Neill emphasized Bitcoin's decentralized nature and its appeal as an alternative to traditional currency systems, especially in environments concerned with currency debasement or geopolitical uncertainty. He acknowledged that while correlations with risk assets still exist in the short term, long-term adoption among institutional and even public sector entities could change that dynamic. The macroeconomic and geopolitical landscape is rapidly evolving. The rise of tariffs, weakening confidence in U.S. treasuries, and shifting global trade alignments are opening the door for alternatives, and Bitcoin appears to be stepping into that role. Industry voices like Bitwise CIO Matt Haugen suggest that structurally, Bitcoin demand is outpacing supply, supported by three key forces. Sovereign interest from nations exploring strategic reserve. Since the current economic uncertainty lifts, many expect Bitcoin to move sharply higher. Projections as high as $200,000 per BTC by the end of 2025 are being floated, contingent on regulatory clarity and improving market sentiment. Conclusion: Bitcoin is no longer just a speculative asset or a hedge, it's increasingly being seen as a solution within a turbulent global financial system. As inflation cools, volatility rises, and geopolitical tensions grow, Bitcoin's role in the monetary landscape is gaining legitimacy. The world is shifting. The only question is, are you shifting with it?